Relief on prices, and Wall Street will take it. The first inflation report of 2026 coming in cooler than expected, enough to calm investor nerves and push the Federal Reserve to maybe more rate cuts. Welcome to the Big Money Show. I'm Taylor Riggs, along with my co-host, Dagan McDowell, Brian Brenberg, Jerry Willis, and with us for the entire hour, Barron's Investor Circle newsletter editor, Josh Schaefer. Great to have you.
Great to be back with you guys.
CPI is cooling. The labor market remains steady. Wage growth is up. So the White House taking a victory lap.
President Trump inherited an economic mess from the Biden administration. Inflation was at a record high 9%. And because of this president's pro-growth policies, inflation has reached a 1.4% annualized CPI rate. That is a remarkable turnaround in just a little over a year. We also see, as inflation has come down, wages have increased under this president. So Americans have more purchasing power.
This kind of report doesn't scream massive rate cuts, but it definitely makes the president's case more compelling. In sympathy, Treasury yields are falling and traders are recalibrating expectations for what could be potentially 3 cuts coming this year. Josh, that's where I want to go to you on. Right now, you're looking at about 50% odds of what could be a third quarter rate reduction by December. And then, of course, good news. You had good labor market news this week and finally better than expected good inflation data.
Yeah, Taylor, I think you take that labor market news and you combine it with the inflation data, and it was just an overall solid week for economic data, right? And the stock market wasn't necessarily reflecting that throughout the week. That's more of an AI story, which I'm sure we'll get into at some point throughout the show. But when you think about the economic data, it's telling a positive story and sort of that soft landing narrative where the Federal Reserve might be able to cut interest rates, not because the labor market is weakening, but simply because inflation is coming down. And at this point, I think you're starting to see stocks rally. Last time I looked, there was 400 stocks in the S&P 500 up, so nearly the whole index up. Main thing that's down is just tech and some of those larger stocks weighing on them. But overall, you've seen this broad economic rally off the positive data.
And I don't want to get too technical, but we've had a couple guests this week sit in that chair and highlight some really key resistance at 7,000 on the S&P 500. It seems like every time we get close, we have a big breakdown, and maybe we blame the AI trade or whatnot. Do you feel like this is could be a sustained rally, or is there further sort of resistance with headwinds on the horizon?
I think you might continue to see a little bit of chop here. So our senior technical analyst at the Barron's Investor Circle, Doug Bush, he loves those round numbers, right?
Yeah.
So he's been talking a lot to us about 7,000. And what you've seen is just the S&P 500 test that level, come back down, test that level, come back down. And I think you might need more of a big catalyst. And by big catalyst, I mean something relating to AI and tech, right? For the index to really keep moving significantly higher, you need your largest stocks to be a part of this rally. You need Amazon not to be down 9 straight days on its worst stretch since 2006, right? You need some of these big tech stocks to start to work. So I don't know if that happens next week. You have NVIDIA earnings coming up in, I think, 2 weeks now. Maybe that's your catalyst, but I think you need tech to start working a little bit better before you sustainably get above 7,000.
Dagan, coming back to these CPI numbers, it was finally seemed like wage growth up 0.4%, CPI up about 0.2%. So generally, you could say real wages are up about 0.2%. And I think normalized going back to Inauguration Day, you're up 2%. And of course, we know under Biden, you were down about 4%. Is that sort of the good news that the White House is interested in? Is that enough to move the needle for how consumers feel? Because prices are still up about 26% since 2020, and we still feel like we're sort of digging ourselves out of that hole.
So looking at average hourly earnings for the most recent jobs report and the inflation rate for the most recent month, average hourly earnings are outpacing inflation by 1.3%. That is growing prosperity for the working man and woman, full stop. Yeah. People will feel that. One of the big components, Larry Kudlow's talked about it, we've all talked about it, day one, restoring our energy dominance. And that and lower energy prices feed through to every absolute corner of this economy and this country. And it also increases our dominance on the world stage in terms of national security and foreign policy. But if you look at, because I love going through all the numbers in the CPI breakdown, because I'm a dork, but the huge declines in energy. Energy commodities down more than 7% year over year. Fuel oil down more than 4%. Motor fuel down more than 7%. 7.5% decline in gasoline. And on eggs, just as a suck it to the libs and the left and the Democrats who all of a sudden cared about people eating eggs. Eggs have fallen more than 34% in price in the last year. But the energy component, particularly given what the Trump administration has done, overturning the endangerment finding, which gave the EPA the ability, the power to regulate greenhouse gases as pollution, EV mandate, closing power plants. Overturning that will, again, continue to lower cost. This deregulatory effort, like we've never seen really in the history of the United States, will continue to lower cost across this country. And so in terms of the easing of inflation, we are just beginning to see this bear fruit. And I am overjoyed that Americans, all of us, are feeling this.
Brian, you're saying amen and yes
I am
over
doing
there,
a lot of
so you got to jump in.
I'm happy on this Friday. I saw that 2.4 number when it came out this morning. I thought, man, that sounds good. Okay, now, somebody who I really respect and always is doing the data analysis, one of our viewers, pointed out to me, as he often does, it's not 2%. Okay, it's 2.4. We want 2%.
Okay.
Okay.
Fair.
And I respect that. But I thought it still feels good. Like 2.4 feels good. So I did a little trip down memory lane, and I thought, when in history has inflation been 2.4%?
2021.
Do you remember the year 2018? Anybody have memories of March of 2018?
The VIX, was that the short VIX trade that collapsed?
I have no idea.
The VIX blow up?
But you know what happened in March 2018? Here's something that happened in March 2018. Larry Kudlow was named director of the National Economic Council in March 2018. Guess what the CPI reading was in March of 2018?
2.4%.
You go back a year before that to March 2017. I have good memories of the economy in 2017, 2018. Those were good years. March 2017, momentous month. Rock and roll icon Chuck Berry passes away in March 2017. Guess what the inflation rate was in March of 2017?
2.4.
2.4%. So why doesn't 2.4% feel so great now when it felt pretty good back then, the era when we didn't have any inflation? Remember that era? It's because what this administration is doing is working. It's just that what the last one did was so abysmal, okay? So I understand we're not at 2%. I'd like to see some more disinflation. But 2.4% is the kind of number we had when we look back on economies that were great, okay? This is good news, Taylor.
The short VIX blew up in February 2018, not March of 2018.
See, that's what I was thinking, too.
Sorry, I was 1 month off.
No, you were. I got you.
It was an interesting month. Jerry, weigh in.
Well, you guys have pretty much covered the waterfront, cleaning up here, mopping it up at the end here. I just echo what Dagan was saying about how this is great for the kitchen table. If you're out there, you're trying to plan your life, your family's life, and you see prices coming down, at some point, Americans are going to have to believe it's true. And I think the story's only going to get better. The core numbers were the slowest annual increase since March of 2021 core.
Yeah.
So that's impressive. Yeah. And to add to Dagan's statements about, what did you cover? Energy, check, big check mark there. Beef is down 0.4% month to month. Coffee down 0.9. Meat and eggs down 0.2%. So we're seeing those things that people got really hung up on and really worried about. Beef, coffee, and of course, gas all coming down. It's going to have an impact. And I think people are going to start feeling better, especially as they get those refunds. $3,800 per household.
The other thing people were hung up on too is tariffs, right? Where's the
Yes.
tariff inflation at this point? And I think that's an important point to make it as we're almost a year out from the whole tariff scenario that happened is you're sitting at CPI at 2.4%. CPI was 2.4% last May too,
Because
right?
tariffs don't cause inflation.
Right. And so you're making
'Cause
progress there. And I think that's another thing that people are starting to realize as well. And then you get less concerned about an inflation pickup going into the end of the year as well.
The Trump administration doesn't quite like this, but tariffs do not cause real inflation. Real inflation is when a dozen eggs goes up 5% a year for 20 years. A tariff is a tax, and it actually causes demand destruction, if anything.
I want to ask a question, though.
Sure.
Carolyn Levitt says inflation has reached 1.4% annualized CPI.
Is she
Is that
doing?
since the beginning of the Trump term?
Okay. So
Would
it's
be
a
my guess.
longer term horizon.
On average. during
That
Trump
sounds like one of
2.0.
those, like a 3-month annualized average or something. Larry always brings those numbers. I can't remember what he
That
quoted last
you
time
take
he was
it
here.
over a shorter period of time and you annualize it.
It's a little wonky.
She might also be talking about the Truflation numbers, which do show a sub
Oh, Brian.
2%. I'm just saying, could be. We're playing guess what she said.
Or maybe
so.
she misspoke, and it's 2.4.
A lot of people, it's a
1.4.
big misspeak. I don't know.
No, I think it's, well, anyway.
What is true in these markets, Brian, Truflation, take a look at Coinbase and Bitcoin. This is interesting. When it comes to Coinbase, they're jumping 17% on the day, but they had a big fourth quarter revenue miss. They swung to a loss in the period because, of course, steep declines in the price of Bitcoin means that if you're the platform that operates the exchange, you miss out on some of that revenue. But there are a lot of people thinking that this is a buy the dip opportunity because shares are down 50% in the last 3 months. So this is a buy the dip. Let's see how Bitcoin is doing. Those prices have been volatile. I was reading a report this morning, $60,000 is another key liquidation phase. But with a risk-on narrative today, maybe some of that turns around. Josh, quick thoughts?
I just agree with you on the bottom fishing of the Bitcoin trade, right? And I
Okay.
think this is an easier, maybe an even easier way for investors to play it. Just buy Coinbase, which often trades with the price of Bitcoin. That's why shares have been down 50% over the last year. I think you just say maybe this is the worst quarter Coinbase is going to see, and you buy the shares now. Because to your point in that release, there wasn't a ton of reasons to be buying Coinbase
No.
from a fundamental basis.